What's up, the Stocks channel? Welcome to everybody. My name's Cory, and in tonight's episode, I'm bringing you another stock market technical analysis update, and we'll start out by looking at the ticker symbol SPY, which is the SP500 ETF. But first, before we get into the charts, please remember to smash that like button, and if you want to follow along on all of my technical analysis updates, remember to subscribe to the channel. Now let's crack open this chart and see what's going on in the stock market today. Alright, so if we zoom in here on today's price action, we can see that we took another attempt at breaking through this $338 resistance level and failed to do so. So that's not surprising. When we get to resistance levels like this, they're generally very strong resistances, and it would take about a 2 or 3 day attempt before finally breaking through. So if we switch over to a 1 hour chart here, we can really see that the price is just consolidating right under this resistance level. And that doesn't mean that it's going to break it, but that does help when we can see the bulls keep the price right underneath that resistance. They're really just taking time off the clock and let the last move digest a little bit and create some more strength. So even on a 1 hour chart, we can still see some bullish momentum with the 5 EMA still above the 13 and possibly getting ready to bounce and make another attempt at the $338 resistance level tomorrow. Now, the one funny thing about history is it doesn't repeat itself, but it often rhymes. And if we go back to this previous resistance level where we saw the price action on June 3rd test the March high, that was also another really strong resistance level that we failed to break through 2 days in a row. And if you look at these two candles and you look at where we are at today with today's price action, it looks a lot alike. I mean, this is almost one for one the same exact two candles as we had here, still bouncing off the 5 EMA and looking very bullish. Now, what exactly happened on that Thursday is on Friday morning we had this 1.4% gap up from the previous high. Of course, that is most likely due to a lot of shorts being squeezed who are getting overly confident that this resistance level is going to hold up. And as I said in last night's video, I'm also expecting a similar scenario where we could easily see a melt up parabolic movement that would bring us well above support and even possibly have a gap up on Friday morning and go into the weekend well above that gap and have a very solid bullish close tomorrow. Now remember, I said in last night's video that there's still a lot of bears in this market, and the more bears there are, the more likely we're going to see the market continue to grind higher, because the market never really follows the sentiment of the investors. The sentiment of the investors is absolutely noise and has nothing to do with the price action. We are strictly seeing the trend right here. Just as we had back in June, we had a very strong bullish trend going in to test that resistance level, and sure enough, that resistance level was broken. Now, once the resistance level breaks and we get that melt up sort of gap up price action, of course, there's a possibility for these blow off the top scenarios, but we're not there yet, so we can't talk about a blow off the top until we get a scenario where a blow off the top makes sense, and right now, there's not going to be a blow off the top at these current price levels. So let's really dig in here and look at this price action. We see another close above the 5 EMA, and look at this bullish price action. Look at these candles and how far the price has come since July 30th. We've had absolutely beautiful price action grinding higher, and while yes, we did open two gaps below us, which is still a concern, that doesn't mean that this rally is over just yet. So I'm still very bullish looking at this chart and looking at these technicals. We still see very bullish momentum, and there's no reason to try to short just because we're at a resistance level. Now, once we go back to this 1 hour chart and we possibly gap up one more time and head higher, now we're starting to look at a scenario where we could start coming back down and closing these gaps. But until we get there, until we get to that high price where shorting actually makes sense, and even the bulls will probably start selling to take profits because they realize how far the markets went, we're not there, and it doesn't make sense quite yet. So we're going to continue to watch this. Now, I made the title of last night's video double top, and that was kind of a joke, because really when you're looking at a double top, you're looking for a scenario where the price came down to a support level, bounced up, went back up to the previous high and failed at resistance, and then came down and broke that support level. So really, when you look at what a double top is and you come back to the S&P 500 and you look at this chart, you do not have a scenario where we are going to come down from this double top and go all the way back down to this support line way down here and break below. That would be a true double top with this chart. Now, what we're more likely to see if this is a double top scenario is we would see the price come back up here, double top, break below this support level, and possibly head lower. But that is a completely different story when I say double top. Now this still makes this a very strong resistance level that won't be broken easily, but we really shouldn't be throwing around the term double top, so I don't want to mislead anybody when I say that. So if we look at this market, it's still very bullish, and there's really not much to be worried about. If you're still long on this market and you have not sold yet, there's no reason to panic sell, and there's no reason to exit your position based off this price action. It's still extremely bullish, and there's still a lot of potential upside. Believe it or not, this market could keep running for a while longer with this type of momentum. The more people that become bearish at these levels, the more likely we're going to see that short squeeze melt up that I've been talking about. So again, look for the price target of at least 341, and then possibly even head into the 350s in a melt up scenario. So let's jump over to the Nasdaq 100 and see what's going on over there. And we do see a failure to break resistance and another test of our all-time high resistance level of about $274 again. So again, it's not a surprise to see the market struggling at these levels, because these are extreme levels, and it doesn't happen in a day when we're talking about breaking through a level of resistance that could be this strong. So if we look at the Nasdaq 100 on a 1-hour chart, we do see a potential double topping scenario where the price came up to this level, failed to pass the level again, and now is heading back down. So in order to make this a double top, we need to draw our support level down here, and we're waiting to see if the price is going to come down here and close below support before we say that it double topped. It's way too soon to say that that's a double top just because it failed at resistance, because there's easily a scenario where we bounce off support and break right through it tomorrow. So don't ever think you saw a double top before you see it break down through its support level, because the true double top is when this level breaks down right down here. So a lot of people get double tops wrong, so I just want to clarify that and make sure it's known. You're really waiting for a double top to show weakness in the market after the support level has been broken. We're not even close to talking about that scenario yet. So let's go back to the daily chart, and we see here that the market is still running up and trying to get up to this $280 level, but as I said last night, we still have to break this previous all-time high level of about $274 and have a nice close above that before we're going to see 280. So we don't want to count our chickens before they hatch, so we're still going to continue to watch these levels, and we still see the 5 EMA is well above the 13, and we still see a very bullish momentum in the Nasdaq 100 as well, with all of these moving averages in a very bullish direction. So let's also take a look at the Dow Jones Industrial tonight, and the Dow Jones is looking a little more extended than the other indices. However, the Dow Jones is also not near all-time highs like the other indices. Now I do still expect to see the Dow Jones, after it broke out here, come back down and test that breakout level as support before ultimately heading higher. And the one concern I do have on the Dow is we do have these significant lower gaps below us, which, as I always say, gaps typically get filled. So for me personally, if I'm trading the Dow, I'm really waiting to see a bounce off this support level before I go long, because there is downside risk with these gaps closing and then possibly find support much lower, which will give me a much better entry to go long at. But if there's one thing for certain, it's that we're seeing bullish momentum all around in the stock market, which is always a good sign. When you have a bull market in the stock market, you really want to see all of these indices going together and moving in the same direction. The last thing you want to see is industrials struggling while technology is taking off to new all-time highs. So it's really good to see the Dow Jones starting to play catch up, and if we zoom out here, we see that we're really not even closed the gap from the March lows yet when the crash originally started. So look for the Dow to continue to grind higher and possibly find a rotation going into the industrials. In the longer term, we might see people start profit taking on some of these other sectors and moving their money over to the industries like the Dow and the industrials, where there's a lot more upside and we still haven't formed new all-time highs. Now there's no guarantees we'll get to all-time highs, but the potential is higher there, and we still see a very bullish breakout here. So again, on the Dow, it's really worth noting to watch this bounce off support and possibly start heading higher, but right now it still looks like the Dow has some cooling off to do before ultimately making an attempt to close this gap around the $289 level. So this is the DIA ETF, in case you're wondering and want to make a trade on this ETF. So let's check in on the VIX, which is our fear indicator, and we see that the VIX is still nicely closing below our $23.50 level, which we said is going to be our gauge of fear returning to the market. Now we did have fear return to the market a couple days ago, but it was just an outlier, and we're right back down to the VIX continuing to grind lower, heading down near that 18 level where we want to see the VIX head and confirm the price action will say that we're going to new all-time highs. Now, the lower the VIX goes, the less fears in this market, and the less fear we have in the market, the more likely we're going to continue to see all-time highs. So the VIX is aligning with our theory that we're going to continue to break higher and break through these resistance levels that we're showing tonight. Now let's jump over to the financials, and the financials are still taking some time to consolidate its recent gains and its recent breakout where we had a nice break above this wedge pattern, and the consolidation is finally over, and we did see a bullish breakout. So with any bullish breakout, like I always say, I like to see the price action come back down, test these previous levels, and then ultimately start heading higher. And the financials are still trading well below the 200 simple moving average, so I'm still waiting to see the financials are ultimately going to come up and test that level, and we're watching to see if the 200 simple moving average is going to act as resistance, or if we're going to break right through it and start getting ready to form new higher high, which will confirm that financials are joining the bullish rally and entering the bullish momentum that we're seeing on some of these other sectors. But right now, with financials cooling off, I'm looking to be a buyer personally because I like the way it's coming down, and if it bounces off these support levels, that's going to tell me there's an easy long position to be made, at least until the 200 simple moving average. A close above the 200 simple moving average tells me to hold even longer and make even more gains as we come up and test this previous high. So all around, the financials are really just taking time to cool off from its recent breakout, and that is actually a very good sign, and we see no gaps in the financials. Now, the less gaps we see, the more likely the bullish momentum can continue because there's no support below needed because we've already seen the support after the breakout. Now, if this breakout occurred and we had this huge gap and we just kept heading higher, that would leave a lot of weakness down here where this price action never had price discovery, and you would expect to see this come down and close before heading higher. So ultimately, the financials look very healthy, and this price action is looking like it's getting ready to consolidate, hang around this support level, and bounce off and ultimately come up for its ultimate test of the 200 simple moving average. Now let's jump over to the industrials, and we see the industrials are doing something very similar where they gapped up and broke out above their previous high way back here in the beginning of March, and now taking some time to come back down and close this initial gap, which nicely closed today, and maybe getting ready to bounce off this as support and continue to head higher. So again, the industrials are still looking very bullish, and we're still getting ready to form these higher highs that we've just saw recently. Now, it's not technically an extremely higher high because we still see the price action closing right around support, but any bounce off this support level is going to take us to higher prices, and ultimately will be another very bullish sign that the SP 500 is going to continue to grind higher as we see strength return to some of these sectors. So if we jump over to the healthcare, we did have our bullish breakout yesterday, and the bullish trend looks like it's getting ready to continue. And we did have somewhat of a volatile day in healthcare, but ultimately closing back above the breakout level where we saw the price close above yesterday. So I'm still bullish on the healthcare sector, and I'm looking for healthcare to continue to grind higher past this resistance level, which is now going to act as support. So for the sake of calling support, let's go ahead and turn that line green. As we like to say, green lines are support and red lines are resistance. I expect to see healthcare continue to grind a little bit higher and form new higher highs. Now jumping over to the US dollar, we have bad news, and the dollar continues to show signs of weakness, and it's still kind of consolidating after finding this sort of double bottom pattern, and we're still waiting to see if strength's going to return to the dollar. Now, I did draw a new resistance level in here because we did fail to break above this level here twice now, and now we're going to watch to see if the dollar starts bouncing back up if we get rejected at this resistance level again. So still, we could be in free fall on the dollar, and the dollar might have just been taking some time to consolidate its downward trend before resuming its downward trend. However, we're still waiting and watching to see if the dollar can come up and break through these resistance levels and show some signs of strength. Any sign that the dollar is getting stronger is going to tell us that the rally in the stock market could be coming to an end. But right now, we still see a very weak dollar, and we're going to continue to expect these asset prices to continue to inflate the weaker and weaker the dollar gets. So we can see that silver is recovering from its initial decline, and that's no surprise because we see the dollar showing weakness again. Now, this is a little concerning that as soon as the dollar showed a sign of strength, silver had a massive sell-off, but that doesn't really mean much. As long as the dollar continues to become weaker, we expect to see these assets continue to grow stronger. Now, we've been following Apple because we say Apple is a market mover, and we see Apple is still not ready to come down and cool off from its recent gains, forming another gap open today. So that is now 3 gaps below Apple, And if I'm a buyer of Apple, I'm still wanting to see the price come down, close these gaps, and bounce off support before ultimately heading higher. Chasing Apple at these prices just seems like irrationality and FOMO. And honestly, I think Apple's going to go up until it hits its $2 trillion market cap, and then people will finally start taking profits. We saw that same exact scenario play out when Apple was approaching its $1 trillion market cap level, and as soon as it hit $1 trillion, it had a massive sell-off. So if you're a buyer of Apple, I would still wait it out a little longer and ultimately wait for a nice pullback to enter this stock. So going back to the S&P 500, we're still extremely bullish. We still have extremely bullish trends, and remember, we are doing technical analysis. We do not care what's going on around us, and we do not care if there's bearish sentiment with the investors. All we care is to see that the price action and these trends are extremely bullish, and we're still expecting these trends to continue higher, form new higher highs, and ultimately have a short squeeze on the bears who think the market cannot go up any longer. They're going to start piling in with their short positions at these levels, and that's only going to cause the market to go parabolic. So that's our story, and we're sticking to it. So please remember to smash that like button if these videos help you out, and subscribe to the channel today to keep up with all of my future technical analysis videos. Thanks for watching, and as always, I will see you in the next episode.